Hey, what's going on, guys? Thank you for watching the video. If you like the videos, please like and subscribe. Today we're going to talk about and discuss three most reliable bullish chart patterns, right? I mean, there's a whole bunch of bullish chart patterns out there, but in terms of my own personal experience and personal trading, trading live, I'm going to discuss in terms of the three most reliable ones. So let's go. So first one is the most simple one, which is the part one, the pattern one, is the flag or pennant, right? If you want to talk about in terms of what a flag or pennant is, simply it's a single line, right? And then you have about that. And if you want to see how the flag is, right? The flag is generally like this, right? Sorry about that. Let's run the line. Right, so this is a flag pattern, right? Just draw a line, and then you get this breakout, right? So that's a typical flag pattern. So in terms of this kind of chart pattern, first thing you always want to take a look at is a sharp move. So to be considered a continuation pattern, there should be an evidence of a prior trend, right? If it's a continuation move, of course, there has to be a prior upside movement before you can say, hey, you know what? It looks like a flag pattern. And flags and patterns, they really require a heavy volume, right? So not only does it require a sharp move, but also a lot of volume going with it. If there's a sharp move but there's no volume, chances are if there's the movement is only in price and nobody really wants it, chances are it's going to flag. This flag is going to fail and it's going to fall apart, right? This one is a continuation pattern, so heavy volume supposed to go in, and in this consolidation is going to be lighter volume, and then the breakout is going to be on higher volume, right? So sharp move, first move up, high volume, and then you have a consolidation. So the flagpole, what really the flagpole is the distance of the first resistance support. So the distance between this is really the flagpole. When you talk the flag pattern really is this situation, right? So if you want to take a definition of what a flag is a small rectangle pattern that slopes against the previous trend. If the previous move was up, then the flag would slope down, right? So the flag is always in the opposite direction of the prevailing trend. Prevailing trend is this, the flag is generally going to move in the opposite direction. The pennant is a small symmetrical triangle that becomes wide and converges as the pattern matures, right? Very simple flag pattern. You're going to look at it is this is the flag pattern, right? This is the up move, right? The up move. This is the consolidation, right? Up move is on pretty heavy volume down here, right? This is a pretty significant on it. The consolidation is on lighter volume, and then you see a continuation on here, right? So price trend, price consolidation, price continuation. Right? So that's the flag one, pattern one. The other one, once again, up move on heavy volume, right? This is the up move, 26 to 36 on heavy volume. Consolidation on ladder volume, and then you have a continuation on consolidation on ladder volume, continuation on higher volume. That's pattern number one. Pattern two we look at is the ascending triangle. Ascending triangle is a bullish formation that usually forms during an uptrend as a continuation pattern. So if you want to see, hey, you know what, what's an ascending pattern? Or what's an ascending triangle, right? So you see something like this, right? So once again, upside is up. We are looking at bullish patterns, right? So if you want to visualize how is ascending triangle is typically going to be looking at something like this. Right. So what you're really seeing is the price moving up, going down, up, going down, and in terms of the ascending one, why you say it's an ascending pattern. The real reason why you say it's an ascending pattern is the price is actually trending up. This is an ascending pattern, right? So this is the ascending pattern, right? So the ascending triangle is a bullish formation that usually forms during an uptrend as a continuation pattern, right? So in order to qualify as a continuation pattern, once again, an established trend should exist. However, because the ascending triangle is a bullish pattern, the length and duration of the current trend is not as important. However, the previous trend should always be considered. The top horizontal line, at least two reaction highs are required to form the top horizontal line, right? So at least two to form a horizontal line. The highs do not have to be exact, but they should be within reasonable proximity of each other. Right? There should be some distance between the highs and a reaction low between them. There should be a lower ascending trend line as well. So at least 2 reaction lows are required to form the lower ascending trend line. Right? At least 2 reaction lows, right? 2 reaction highs, 2 reaction lows. If that is the case, then sure, it's an ascending triangle. So this is a really good example of it, right? Nice consolidation. Same thing. Nice consolidation, nice ascending triangle. At least 2 touches, which is on here. Last is the pattern number 3 we want to talk about is the wedge pattern, right? Now wedge pattern, if you want to define what a wedge pattern is something where the price moves up again, right? And now with the wedge pattern, what you're really trying to see is price is actually trending down, right? So let me draw this and make you understand what, right? So price is kind of like steadily moving down. So do you see the idea, right? So what you're seeing is, I mean, after the up move, you see this price kind of trending down. Now, how it looks like a wedge pattern is if you just draw a cross, right? You draw a cross, you see it's a wedge pattern. Now, why is a bullish pattern? Because after the uptrend, you have a small downtrend, and the break, this is a wedge pattern. So it's a reversal pattern where wedges form when the waves of an asset move within a narrowing range, angle either up or down. Triangles are formed with the price moving sideways. Wedges can make significant progress either up or down. Right. So this is a really good example of price moving up, right? Significant moving up, and then it's trying to trend down. Once it breaks a wedge, right? If you want to enter right at the break, you could, or you can wait for a higher high, and then it has a shooting back up. Right. So 3 of the most powerful chart patterns out there that we discussed. Number 1 is the flag and pennant pattern. Number 2 that we talked about is the ascending triangle pattern. And number 3 is the wedge pattern. Any questions, hit me up. If you like the video, please do like and subscribe, and have a good one.